Okay, so the Fed came out yesterday and said 75 basis points hike. Everybody freaks out and thinks that means rates are going up 75 basis points. Your rate is not going up 0.75% because Fed hiked the Fed rate 75 basis points. This is actually a good thing for rates, believe it or not. The markets were very nervous. Monday, the reason rates were so high, and even yesterday, because investors are still trying to figure out what's going on, is because they were concerned, the markets were concerned that the Fed wasn't going to be aggressive enough. They thought maybe they were only going to come out with a 50 basis point hike. And the reason the market, the stocks, the bonds, they want to see a higher hike from the Fed is we have to get inflation under control. Okay, if you're an investor and you buy mortgage-backed securities, you buy mortgages on the secondary market, and you're going to buy a loan in the 5s, but inflation rates are at 8.5%, 8.6%, that means your investment at 5%, that's going to give you a yield at 5 or 5.5%, just decreased by 8.6%, right? Because inflation is outpacing the income you're going to make on your investment. So investors don't like that, and that's hurting the secondary market. It's hurting liquidity. It's reducing the buyers that are buying mortgages. And on top of that, the Fed is not only, they're no longer doing the qualitative easing where they were buying mortgage-backed securities, but they're also doing a sell-off. So they're selling off and getting everything off of their books. So we don't have the investors to buy the loans that we had. We have less liquidity for that reason. And we have the fear of inflation, and the stocks and the bonds are paying the price, and investors don't like it. So when the Fed came out and they announced a 0.75% hike, the markets loved it and we saw improvement. Now today, we've actually seen a correction back the other way. Nothing to do with that. Had to do with the Swiss market. They came out with a hike, and Bank of England, and some things that are happening globally. But the long-term story is we need the Fed. They're even talking about another 0.75% hike in July. Don't freak out by this. This is good news. We've got to get inflation under control because that actually helps interest rates. Usually when the Fed rates start going up like this to control inflation, that will help interest rates long term, okay? So don't be nervous. The second thing I want to tell you is buy the home, buy the payment, don't buy the rate. You're buying your forever home. You're not buying your forever loan. You can always refinance the loan, but home prices are going to continue to go up. So don't get stuck in that mindset of I'm going to wait and you outprice yourself out of homes. Okay? Michelle Oddo, the Oddo Group. Eliminate home loans. Give me a call. Love to give you more strategies. And for more mortgage advice, please like, share, subscribe below, and you'll get the little ding every week when we put out a new video. Michelle Oddo, the Oddo Group.